All right, let's get right into the stock market technical analysis. We are going to start out looking at some weekly charts because today's Friday. We're going to close out the week. So as I go along, guys, just drop me a thumbs up if you guys find value. And if you're new, this channel is all about finding trade ideas before they happen. All right, I point out the key levels. I give an opinion on where I think things are going. I kind of teach the skills available to manage risk. And again, if you're new, check out my stock market technical analysis course. I put that together. It's all the knowledge that I've gained over many years, and it's all in that course basically. And I priced it at 99 bucks. So I priced it affordable for all. Really good value there, guys. Check that out. And if you don't want to, just follow along and you'll see that, you'll see how I put these trades together, and then maybe you'll take the course afterwards. All right, guys, weekly chart on triple Qs. You can see here. All right, we've got this level right here. It's this uptrend line marked in red on triple Qs. That's 328.04 is where that falls today. And as I zoom out, that's your bull market trend line or your bull market channel in the tech sector, all right? So we're on the upper side of the channel right now. I do think that we're coming back down into the channel longer term, that we will be down here at 270, 280. I don't know when we'll get down there, so I don't know the exact level, but I do think we're going to get down there. But the first things first, we need to break into this channel. All right, we need to have a weekly close back into the price channel. If we get that, the probability elevates that we're going to head to the bottom of the channel. So as of right now, just kind of hanging out right there. Let's look at the daily chart. Okay, on the daily, you can see we've really been testing this trend line for the last couple days. Just right there, closing right on it. Today we're right on it as of right now. So we could get strong selling into the close. That's completely possible. So watch for that. If you start to see big selling today, there's bigger things at work, and it goes back to that weekly chart and the fact that we're breaking back into that channel. So that will be, bearish. That should mean that we're going to head to the bottom of the channel. The other thing that we're watching for, we do have bullish divergence. So the momentum is bullish right now, right here in these momentum indicators. Again, I must state this again, that divergence is not a reason to take a trade, all right? Bullish divergence doesn't mean that you take a trade right here and now, all right? It doesn't mean we're going to break bullish and everybody go long and we're going to make new highs. All that means is the conditions are there for a bullish breakout or a rally, all right? We need to see that before we go bullish, and that would be on this downtrend line right here on the daily chart. See the downtrend line right there? So you have bullish divergence, you have a downtrend line. If we break to the upside, or when we do, eventually we'll probably break, but if we break to the upside, that would be a potential buy signal, okay? So we'll watch for that. That's an option. Otherwise, we are in a downtrend and we need to go with the trend, because ideally what I think is going to happen, if I'm right on this bear market call, is we're going to sell off and burn through the divergence and it will no longer be there, all right? And if that happens, we will not have the momentum bullish and we will have downward price action and everything will be very bearish at that point. All right, so we'll just wait, we'll hang tough and see what happens. Levels I'm watching is obviously right here, 329, it's about 329.80, and then the upper, this downtrend line right there today falls at 338.63. Okay, I'm going to skip the SPY today because I do feel like, there's defensive stocks in the SPY, and wherever the Qs goes is likely the direction of the SPY, and just most likely on a little bit of a smaller range. IWM. Okay, so IWM, same thing. We have a potential downtrend line, all right? And I've got one reaction high here, and I've got one here. So I have a potential, and we haven't hit that for a while. So we might just trade sideways for a little while. We even might, what I think is going to happen, if you want to know my opinion, I think we're heading down. We're bear flagging right now, okay? So that still remains, which means we've got a flagpole here on the daily, down to here. Then you've got the flag, and the flag is basically here. All right, this is your flag. And what you do is you take the original flagpole and you move it to the top end of the flag, and then that would give you a projected target. And right now that's about 170. So I think what we're going to do is head down, hit that final target, bottom out, and then have some sort of a bear market rally. All right, this will be in a bear market at that point in time because from the high down to here, this will be down about 30%, which is an official bear market. Okay, as of right now, IWM is down from the highs to where we're at right now, 18.5%. So just flirting with bear market ranges. All right, moving on, semiconductors, SOXX. No real technical change as of today. We're just kind of stuck between, basically resistance is up here, and the 200-day moving average is right up there. It's about 476.75, and support is right here, 433.35. You can see all the tags of support. So we're just chopping around in a range. No technical change, so I remain short. The reason why, big negative divergence. We had this bullish breakout up here when we had that negative divergence. That was a bullish price action, but negative momentum, telling me we were likely going to reverse trend. And so far, we've seen that reversal. So I'm going with the existing trend from up here, which is a downtrend. Okay, so I'm looking for that bearish break. We just need to see those levels get taken out. I did take another trade today on Barrick Gold, and again, if you guys take my course, this will help you spot these trades. Looking at the hourly chart here, so on the hourly, we have this uptrend line right here, and we started to break it the last couple days. Again, I took some profit on my Barrick up here, kind of exited out of my positions, and then as we gap down here, it looked to me like we're battling with resistance, so I was expecting us to sell down. So if you draw the hourly chart, first level of support, you can see was former resistance. Resistance, resistance, resistance. There's lots of reactions there. All right, so that should be support. And again, it was support once. And today we gapped down, sold down, and hit that support. All right, I re-entered my position right there, went long right on that tag of support. Now we've kind of bounced and almost filled the gap. So we could roll over. Again, I talked about how I'm thinking there might be a little downside in gold and the gold miners before we recontinue the uptrend. Again, gold is in a bull market. We want to buy the dips, all right? And that's exactly what today was. We gapped down. That's a dip right at support. You can buy that, all right? And so looking at the daily, I don't know if we're going to go any lower, but there is some support right here about 22.42. And on Barrick, you can see that's actually a pretty key level. I've had that marked out for a while. So lots of tags and reactions on that. It would make sense for us to pull down to that level, all right? And that's probably the end of where it's going to drop to. There is always the potential that it's going to drop all the way down here to $20 and retest the point of the breakout, all right? Again, Barrick was in a big isometrical triangle, and it broke to the upside. So you break out, but you can come back and retest, all right? That retest is the most bullish or the most objective area to go long if you didn't go long here on the breakout, all right? Oil, so here's oil futures. Again, uptrend line on the daily right there. Okay, we've got lots of tags of support here. Looks like we're going to come back down to that trend line. So no trade on this one. I don't really see negative divergence. I don't really see a short here, so at the end of the day, maybe we hit this and bounce again and put in a new high, then we get some divergence. But as of right now, oil's bullish, so that's the only way I would want to lean. And I am looking for a short on some of these oil miners, especially this DVN, but I just don't see it yet. Again, we have negative divergence here. All right, it's clean and very clean negative divergence. But again, negative divergence is not a reason to short. We need to see a break of trendline support. And there it is right here. There's your trend line. So I need to see that break for the next sell signal, and I'll let you guys know if I see it. XLP. I talked about this one yesterday, and again, this is something I teach in my course as well about how to spot a breakdown. But again, this is like a bullish or a bearish rising wedge, or you could call it a price channel, but basically it's a bearish rising wedge. We had a bullish breakout to the upside, but negative divergence. All right, that tells you that, all right, very high probability. If I can get my line tool right, very high probability that this breakout's going to fail. All right, we came down to the bottom of the channel yesterday. Looked like we were going to have a sell signal because when I pointed it out in my video, we were down here. Again, you need to see that daily close, and you want that breakdown to be impulsive. You want it to be a nice solid breakdown where it really can hold the breakdown. The buyers stepped in yesterday and bid it up, and yeah, it closed below the trend line, but too close to call, in my opinion, as a breakdown. Today we're below it, but again, it's just not real. It's not the kind of breakdown weakness that you want to see. So this is no dice, not a sell signal. I would not take it as a short. I tried to take it yesterday. I saw them start to bid it up. I just got out. We'll let this thing resolve. So what could happen is, what I think is probably going to happen. I think they're going to bid it up, and we're going to make another run, pop up, maybe up to here. Then we're going to roll over in the future and break. And the next solid breakdown will be likely the real deal. That's one option. The other option is obviously if they just break it today and you get that big red breakdown candle today, then that means today would be the sell signal. So that's what to watch on that one. Support on this one, first level support is about right there at 68.75. GameStop, relative weakness. I think GameStop's done, guys. I think we're heading lower. And that's exactly how we're positioned. We are short, been short GameStop since right in here in early January. And, we're seeing it's down 3% today, even though the market's trying to hang in there. And as far as I can tell, GameStop key level of support, which is now resistance, 131.94. All right, we held that for a while. But again, these are all, and this is retail money. All right, there's no hedge funds that are long this money. This is all retail money. Now again, the hedge funds were short down here pretty stupidly, and they got caught. The retail obviously did put some damage on them, and that's what this was. The hedge funds all got out. They all covered and got out. Any hedge funds that's involved in this thing now is going to be short, and this money all right through here is all retail money. All right, so retail money, as we know, will panic sell. They'll sell as it starts to dump. And so we're looking for that. And that key level of resistance we broke. All right, so we had a sell signal right in here. That was your sell signal. You broke, back test, and now we're rolling over. Should be lights out. You take out the lows right here at 92.80-ish, and it should be a pretty swift move down to our target right now of about 45 to 40. I might hold out for that, $40 range, but right in there is our profit target. We'll probably get there within a day or two. Once we break that level of, once we take out these lows, these 92 area. Coffee, commodities. So this is Joe coming into what looks like might be a buy zone. We'll watch it, but again, we've got some support right here at 58.64. You can see that was resistance, kind of resistance through here. We finally broke, and it should be support, and we haven't really hit it since. So coffee is coming down. Joe, it looks like it's going to run down and hit that level. The 200 days just below as well. So we might run down, hit that, maybe bounce and hit that 200 day and then recover. But I am thinking this is going to be the zone of support. Anywhere from about 58.60 down to the 200 day should be the zone of support. At a minimum, you should get a pretty good bounce off of that. So I'm looking to be a buyer on coffee, on Joe here pretty soon. And I'm not going to wait for the 200. I'll likely buy at the support level and then maybe add if we hit the 200 day. Looking at the hourly chart here, no divergence quite yet, but if we dip down there here pretty soon, we might have some RSI divergence. So it's not quite showing up, but things to look for on that one. Okay, PANW. Looks like we're flagging out, and it's a bear flag. So we've got the flagpole here. We've got the flag, and then you take the pole and you move it down there, and it's projecting us down to our target. All right, so that's in play. Looking at the hourly chart on PANW, I've kind of adjusted this, but there it is. I think that's our flag. And so you get the break of the flag to the downside. Nice impulsive hourly close below that trend line, and it should set us up for a relatively impulsive move down to our target of about 500. All right, it's right in here on the trend line. That trend line on the daily comes all the way back from April 2020, and you can see all the tags of support on this trend line. All right, so that's our target for right now. And just to watch, if you're looking to maybe add to the trade or something, you might want to watch this hourly chart and a break of this minor flag. I do want to point out this gold miner, or this is really a gold royalty company, MTA Metallo Royalty. Kind of interesting looking chart. We'll see if it plays out. But gold's bullish, all right? We do have pretty bullish gold. And a lot of the miners have already started their breakout. Metallic quite hasn't. It did break out, but we're back testing. So on this one, you've got a bullish falling wedge pattern. Okay, so on this one, you can see resistance here, here, all through here. Lots of reactions to validate this trend line. We had another one. And then we put in bullish divergence. All right, this has been building bullish divergence for quite a while, actually. And we broke out. There's your breakout or your buy signal. All right, and followed by another impulsive day. Now, this day, they sold it back below the 200, and that's really what's containing it at this point. But it is a break above the downtrend line, so it can go either way. But I'm going to take it at face value, which is a breakout and a back test, and we're just kind of hanging out here. I think we're going to break to the upside, and it's still objective. It's still right in that area where it hasn't really taken off yet. So I am long this one and looking for it to break. Confirmation would be a break and a close above the 200-day moving average. All right, that's going to be your confirmation that, okay, this thing's off to the races. Likely going to come in a pretty impulsive way. So, and then obviously there is the potential for a false breakout. It could fail and head back down. So we do want to watch for that as well. All right, KHC, this is a long trade. Now, again, this one has been a little tricky for me, so just want to point that out. But we have a support line right here at 37.80, and you can see that was big resistance for a while. We got in a very impulsive breakout above it, so we have a breakout. We're above the 200-day moving average, and we've been just kind of flagging out. And today, we're breaking down, hitting the 200 and also hitting the support level, and so far we're holding. All right, so this is an objective area to go long. I did take a long position on this morning, and I'm looking for this to hold and then launch higher. And ideally what I would look for is really a continuation of this flag pattern, which would be something, let me kind of mark that out, something like this, and we measure that out. And it does set us up for a move up towards the highs here. Again, if we get that close, there's a big gap from back in February of 2019, sitting at about 48 bucks. And if we get that close, we're likely going to run up and fill that gap. So that's the target as of right now, is gap fill. Again, you don't want to hold out for the very last penny of that gap fill. You'd want to step in a little early and sell your position, in my opinion. So that's the trade idea. We're at support. It's objective. Looking for this to bounce off of this and run up and do the gap fill. Tesla's below the 200-day moving average right here, which falls at about 846, 845.93. But again, it's just been chopping around within this range. It's, just kind of stuck here. So nothing technically has changed. I still like shorting this thing, but we need to see some more price action and a catalyst to get this thing to continue to move. It's likely going to move if the market continues to break down and makes that next leg lower. There's some support right there at it is 780.30. Okay, so that's the area of support. If you break that, it's probably lights out for Tesla down to the next level of support, which I don't see until about 555.25. I mean, there's probably some minor levels where we'll bounce. We've got little reaction levels, but I don't see any kind of major support till about there. So I think it'll probably be, work its way lower. TSM, I still like this as a short. Again, your level of support, which has now been broken, is 108. All right. And this one had negative divergence. That's in play. We broke support. We're coming in for a back test, it looks like. So, here's your breakdown. We could run in, back test, maybe chop around for a couple days and then roll over. Completely possible, and it doesn't change the technical picture in this. So any kind of back test would be an objective area to add to a short. Again, this is sell the rip, right? So if we continue to rally up, we'll add to the short at that key level of resistance. And we just set a stop slightly above. I probably wouldn't want to let this thing get into this area. 111 or so, I'd probably look to stop out. And I forgot to point this out yesterday, but TLT, this is your This is your interest rates. This is your U.S. Treasuries, and we're kind of continuing the downside move in TLT, which means interest rates are rising. So if you want to look at interest rates on TradingView, TNX will give you a good idea. We're up near the highs, over 2%. And, again, rising interest rates are bearish for tech stocks. Tech makes up a huge portion of the S&P 500, as well as just, the FANG stocks are really over-owned by almost everybody. And as rising interest rates continue to put pressure on tech, that should continue to put pressure on the broad market. So we'll keep an eye on this, TLT and TNX and the interest rates. Nothing that I'm looking to trade, but definitely helps us as a measurement of the markets. And that's all I got, guys. So check out the course if you haven't done so. Drop me a thumbs up, and I'll do a live stream tomorrow morning. Catch you guys on that later.